Hi everyone and welcome. If you just started a business or you're about to start a business, you might be wondering how you're going to pay yourself. So I'm going to talk about different business structures and how you would pay yourself under each different business structure. The first business structure that you might set up is a sole proprietorship. Now, a sole proprietorship is just a business with one owner. A sole proprietorship is considered the same tax entity as its owner. So you would file one tax return with your W-2s if you have any from any jobs you might have, and then you would have a Schedule C with your business, sole proprietorship, income, and expenses on it. If you're a sole proprietorship, you would pay yourself with something called draws. And what a draw is you just take money from your business bank account and transfer it to your personal checking account or write a check. And that's it. You don't pay taxes at that point. You are just drawing money out, and then you would have to pay quarterly estimated taxes, and you would have to pay self-employment tax and any difference in what you owe at year end. So during the year, you would just have to keep up with how much you owe in taxes or have some sort of estimate. And a CPA can usually help you with this. So as a sole proprietor, you would not pay yourself as a W-2 employee. Now you can have employees, but you yourself would get paid using draws. And then I just want to mention with a sole proprietorship, it is easy to start and easy to form, but it does have something called unlimited liability. So I just want to make sure you're aware of that if for some reason someone sues your sole proprietorship, then they can potentially go after your personal assets. So you would want to make sure you have a good insurance policy if you're going to go this route and try to get a little extra protection there. And then the second business formation would be a partnership. A partnership is just a business with two or more owners. So if you're going into business with someone else and you're both going to be owners, or you have 3 or 4 people, you're all going to own it, then you may decide to form a partnership. As far as taxes are concerned and paying yourself, you're going to pay yourself in a similar way as if you were a sole proprietor. In other words, you're going to pay yourself with draws. In other words, your partnership would probably have a bank account for business activities, business expenses, business income, and you would either write checks to yourselves as owners or transfer money to your personal accounts to pay yourself on a weekly or monthly basis or however often you pay yourself. So a partnership's going to have draws, and it is going to also have that unlimited liability, so you would want to make sure you have a good insurance policy, and you would not pay yourself as a W-2 employee. You could still have employees, but you would not pay yourself through that payroll service. You would pay yourself with the draws. And then a corporation would be the third business formation that I want to talk about. Now, a corporation is considered a separate legal entity from your personal tax return, your personal taxes. So if you were a corporation, if you decided to start a corporation, you would file a corporate tax return and you would pay yourself as a W-2 employee. So a corporation is just a business that's owned by shareholders or stockholders, and it is possible for you to be the only shareholder in your company, and you would pay yourself as a W-2 employee. Now, the corporation would still have to do estimated quarterly taxes. And then, of course, at year end, the corporation would file a tax return and you would file your own tax return as an employee with your W-2. So these are actually considered two separate entities. Your corporation is separate from yourself. Now, that does protect you as far as your liability. If the corporation is sued, they're not going to go after your personal assets, or it's not going to be so easy. So there is a little bit more protection there, which is why I like this business formation. This is my personal business formation. I prefer it this way. And it allows you to do your withholding, your employment taxes throughout the year on each paycheck instead of trying to pay large lump sums every quarter. Now, you do have to still file and pay estimated quarterly corporate taxes, but if you structure it in a way that you don't pay a lot of corporate tax because most of your profit is paid to yourself as a W-2 employee, that can help buffer the issue where in a sole proprietorship or partnership, it might feel like you have these large lump sums of money that you have to pay in a quarter, whereas if you're an employee as a W-2 employee, your taxes are taken out little by little in paycheck. If you're a corporation and you have to pay yourself as a W-2 employee, then you definitely will need a payroll service. And likewise, if you're a sole proprietorship but you have employees, you would need a payroll service. And if you're a partnership with employees, you will need a payroll service. So you still may need a payroll service even if you're these other formations. But the difference up here is you would be paying yourself with a draw. The owner of the company in these formations, 1 and 2, get paid with a draw, and the owner of the corporation would get paid as an employee. And then an S corporation is something that you can elect. So this is a C corporation, number 3, but then there's a special election that you can set yourself up as an S corporation. So it's just like a special kind of corporation. It just has some different tax advantages. You may not be eligible to be an S corporation. It just depends on your business, and you would probably have to talk to a CPA to decide if this is an option for your own personal corporation. But you would pay yourself as a W-2 employee more than likely under the S corporation as well. And I just want to talk a little bit about payroll service also while I'm talking about corporations and paying yourself as a W-2 employee. A lot of the bookkeeping softwares like QuickBooks have a payroll function within them. I believe Wave Accounting also does, and a lot of other bookkeeping or accounting softwares also have a payroll option. But I personally have had better luck using a separate payroll service. Now, there's nothing wrong with using the payroll service within your software. It does make things easier. Everything's all in one place. But as far as support and knowledge, I have found that I get a lot better support when I use a software that's dedicated solely to payroll and all issues surrounding payroll. So my 2 favorite are Gusto and ADP, but there's some others out there like NetChecks, and they do other things other than payroll. But my point is their focus is on payroll and anything related to payroll. So that's why I like using a service like that. But of course, there are a lot of options out there for you. And then in general, I like using a payroll processing service because they'll file a lot of those quarterly tax returns for you that are related to payroll. So your unemployment tax filings, your income tax withholding filings, and things like that. A lot of times they'll file a lot of that for you. And that can be a lot of the payroll services, whether it's QuickBooks, ADP, Gusto, NetChecks, and so on. A lot of them will file all that stuff for you so that you can focus on your estimated tax payments and your year-end tax returns. And then the last business formation that I want to mention is an LLC. This is called a limited liability company, and it's supposed to have the advantages of limited liability. In other words, someone that sues you isn't going to go after your personal assets. Your liability is limited. So if you file or start an LLC, more than likely you're a single member LLC, which is very similar to a sole proprietorship. It just has that limited liability. So more than likely, if you're an LLC, you would be taking a draw to pay yourself, unless you are for some reason an LLC corporation, and then you would pay yourself as a W-2 employee and be treated more like a corporation. So for this one, it just depends. So I hope you found this video helpful. If you have any questions, feel free to comment below. Thank you for watching.